Hi friends, what's up? All I needed to turbocharge my trading account to a 4-figure balance today was the desire, $5 and just 2 indicators. How did I manage that? Stick around until the end of this video to get all the juicy details. Today I am sharing with you a simple yet a killer trading strategy, and as always at the end of the video I'm going to show you how to easily withdraw your earnings from the broker to your wallet. Can't wait to dive in, so let's get rolling. Guys, I just placed a bet on the market going down. Let's watch what's happening with the chart and why I made that call. Notice how the chef trend cycle has hit the oversold zone. That's a heads up that the quote prices might drop. Now look at the chart. You see those weird dots above the candles at first glance? I'll explain what they mean in a bit, but for market analysis, here's the deal. If the dots are above the chart, it means the trend is heading down, and that's where we should be betting. And based on these signals, I'm expecting the price to fall, which is why I've placed a downward bet. And another key point is where to jump in. Notice how I opened an option during a pullback. This way, the risk of getting knocked out by minor fluctuations or a quick spike in the chart is minimized. And this approach brings in positive results and profit to the balance. $9.40 in the bank, that's our first catch with today's trading system. And guys, check out the screen. I'll introduce you to the parabolic SAR indicator and decode those mysterious dots. They're actually potential stop loss levels and reversal points that parabolic SAR plots. In binary options, especially with minute-long expiries, stop losses are not a thing. But these dots are a crucial indicator for us to determine the chart's movement direction. And how does it work in action? So, if the dots are above the chart, it signals a downward trend. And if they're below, the market is on the rise, like in this case. And another cool signal, folks, if the chart crosses the curve of these dots in any direction, it is a market change signal. It could mean a reversal or a sideways market, but in any case, it's a sign for you to pause and think, and to adjust your moves correctly. And from this, we can draw another important conclusion. The farther the dots are from the chart, above or below, the stronger the current trend, and the more likely the chart will continue to fall or rise. It's all super simple and incredibly effective. Let's see it in action by looking for a new suitable entry point. Friends, do you know what blows my mind? It's the fact that trading seems so straightforward. Most strategies and indicators were invented probably decades ago, and they all have been thoroughly dissected. Yet, making money on here does not come easy to everyone. Why is that? It's because every trading strategy needs its own secret ingredient, and that is experience. I've known this firsthand, having spent 3 years and hundreds of deposits trying to start earning in trading, but you have a chance to save your time and money. So, every Monday to Friday, I host daily marathons where I post trading signals and I analyze them. And as a result, we boost our deposits along with other participants from $100 to $5,000. You just have to replicate my trades and earn money with me. If you're not sure, then you have two choices. You either skip this video or you follow my Telegram channel where you can read reviews from previous participants and also see the results of the previous marathons. And after that, you can make an informed decision, all right? So follow the link to my Telegram channel in the description below this video. My contact info is also in my Telegram channel. You can find it there, all right? And I can't wait to start another marathon. And for now, let's get back to breaking down our trading strategy. And here comes the golden moment, friends. This time I'm betting on a rise. Let's dive into the chart and I'll walk you through my decision. So the parabolic SAR stop loss points are below the chart. That's a hint of an upcoming rise. At this mark, there is a support level. I waited for the chart to dip to it and open my position right from the level, expecting a bounce. All right. And notice the shaft trend cycle is currently in the oversold zone. This signal conflicts with the parabolic SAR's indication, but this oscillator has a trick up its sleeve. It's pretty slow to react to market changes. That's both a good and a bad thing. The good part is it filters out the noise, and the downside is it misses a lot of trade opportunities. For now, I don't see enough selling pressure to break through the level. Hence, a bounce was a very likely forecast, confirmed by the parabolic SAR curve. Right on this forecast, we cash in another profit, $17 in the bank, friends. We're in a roll. Let's hunt for a new opportunity. Friends, this moment is too good to pass up. So, I am betting on a rise again. Let's figure out why. Look, the shaft trend cycle is firmly stuck in the overbought zone and it's not leaving. And through the parabolic SAR's curve, we can easily spot the chart's confident growth. The points are now far from the chart. The chart is currently consolidating in this range. From the lower boundary of this range, I've opened a bet on a rise, waiting for growth. And here's the gist, folks. According to the indicators, we're expecting growth, so the chart is unlikely to drop below the support level, right? Thus, correctly catching the entry point at the very bottom nearly zeroes out the error margin. The chart has nowhere to go but bounce off the level on an uptrend. That's the whole secret. This accurate calculation brings $32 to the balance. Not bad at all. I've cranked up the investment size to the max. Today is a sprint, so we're going all in. Let's look for a new trading opportunity, friends. And I'm betting on a price rise again, friends. But this time it's a bit riskier. Right now there's actually a new storm in the market. These abnormal candle spikes, that's a pretty unusual situation for the market. But nonetheless, the first squall has ended and I took this risk because I see that the shaft trend cycle heading towards the overbought zone. Parabolic SAR stop losses are below the chart and actually far from the zone of, let's say, real trading, if we ignore the candle shadows. So I'm expecting the growth to continue. Not the perfect entry point this time, could have opened the trade lower, but the fluctuation range is also big now, so I'm waiting for a confident rise to a mark significantly above the entry point. And I don't recommend trading on news background for beginners, it's too risky. This time the trade closed with a profit, but without experience, there's a high risk of losing money, alright? On my channel, there are videos on how to trade on news. I advise you to check them out to avoid blowing up your deposits, okay? And meanwhile, let's look for a new trading opportunity. Friends, this time we're opening an option for the Australian and Canadian dollar currency pair to go down. As usual, let's snapshot the situation to understand what's happening. So here's the nearest support level, alright? The chart has room to drop to it, and that's where I'm predicting the quote prices will be in a minute. And there it is, as expected. Should we delve into the indicator signals? We see synchronized indications for a price drop, shaft trend cycle left the overbought zone, and the stop loss points are way above the candle level. And what else do you need for a solid price forecast? Friends, as you can see, this trading strategy is incredibly simple, but that's where its power lies. Often, beginners get lost in complexity thinking the more complicated the system, the more money it will make. But it's almost never true. Just two indicators provide very reliable signals and have already brought my deposit balance up to nearly $106. We will reinvest this sum in the next trade and see where another good opportunity presents itself. And here's just such an opportunity. Friends, eyes on the screen, I'll explain my logic. So the last candle spiked unjustifiably high after bouncing off the support level. Looking at the indicator signals, we see a unanimous opinion: the price should fall. A downward trend has formed in the market. So I'm expecting that after the bounce, the price will return to its true value, namely back to the support level. All right? This market situation is scientifically called divergence, and it's almost always a profitable moment to make a trade. I'm already expecting questions about the indicator settings in the comments, all right? Everyone wants to know the secret numbers, but there aren't any. My settings are the default standard. The real secret of the strategy lies in choosing the right entry point, okay? And it yields results. Nearly $195 on the balance. I'm really liking this strategy so far, so I'll keep working with it. Let's see how much more I can earn. Opened a deal for a decrease. Let's dive in because the situation is somewhat contradictory. On one hand, I see the shaft trend cycle entering the overbought zone, which signals growth, not a decrease. But on the other hand, while the parabolic SAR curve is built above the chart, the points are almost touching the chart now. But there's a strong resistance level, friends. The shaft trend cycle is close to the overbought zone, but hasn't fully settled there yet. So I'm waiting for a bounce and then a breakthrough of the level after a correction. Only now is the shaft trend cycle entering the overbought zone. So on the next candle, I wouldn't trade down, but would look for an entry point only for an increase. This trade slightly deviates from the formal strategy conditions, but still delivers a confident result, $366. Let's increase the investment size, and why not? I said we should look for an opportunity to trade for an increase, and here it is. Let me explain why I opened such an option now. So as I mentioned, note that the shaft trend cycle has settled in the overbought zone, all right? And essentially we see a price corridor has formed. Even with strong amplitude fluctuations, the chart is essentially in a sideways trend within its range, basically. We got a bounce from the upper boundary in the last deal, and now I'm expecting growth from the lower boundary just the same. Again, we note that in a sideways market, indicators do not behave as predictably as they do during a trend, alright? So it's important to catch such nuances or you'll face drawdowns with any indicators. Because a sideways market is the most common occurrence. To understand it better, check out my video on this topic on my channel. Friends, let's lock in the profit. $670 in the bank. We'll leave this pair for now and move on. Okay, let's see. Yes, a great moment. I'm opening a trade for an increase. Why? Look at the chart, friends. I'll explain everything. I'm basing this on the support level here, and I'm expecting the chart to do the same. Bounce upwards because both indicators signal that the quote prices will rise. So, the main thing is to find a good entry point. In this case, it's a support level, all right? And from there, I predict growth. As I've said, the success secret of the strategy largely lies in the right timing and place for the trade. Another important point. You should forecast various scenarios in your head and understand how you'll act in different situations. Now the chart has dropped to the support level. That's one branch of events, but it could have gone up. Then the entry point would have been different because you'd have to look for entirely different levels. The deposit has now crossed over 1,000. I'm upping the investment to the maximum possible. $1,000, and we'll look for a new entry point for you. Friends, this situation is a carbon copy of the last. Therefore, I'm trading for an increase again for all the same reasons, which makes sense. We see the support level at this mark from which I expect growth. The same signals from the indicators. Shaft trend cycle is in the overbought zone and parabolic SAR stop loss points are significantly below the chart. And it's no surprise that the charts have similar features in this and the previous deal. Both currency pairs involve the Swiss franc, meaning there could be a correlation between them. Of course, they don't mimic each other exactly, but it's possible to catch common trends and use such a situation in trading. As expected, the chart smoothly bounces off the level, as it simply has nowhere else to go in this situation. I love such trades where everything goes smoothly without any stress, which is nice. And I love it when such amounts land in the balance. Profit $870, over $2,000 total balance. Let's look for more opportunities to earn. For example, we can earn here, opening a trade for a decrease. The situation is a mirror image of what we analyzed in the previous deal. Here is a resistance level from which I expect a decrease. Currently, the chart is in a price consolidation phase, drawing the support level, and the market fluctuations are occurring within this corridor for now. The trend is downward, so the price is unlikely to go above the resistance level. It can very well go down, as we also see a confident oversold zone by the shaft trend cycle oscillator. Again, it all comes down to choosing the right moment to open a trade, alright? I often hear a question, why am I not succeeding? Most often the problem lies exactly in errors with choosing the entry point, alright? Specifically in being too hasty. When beginners try to chase after a sharp rise where they should have waited for a pullback, the balance is now over 2,800. Let's look where to invest these riches. So what do we have here? Yeah, I think it's better to trade for a decrease this time. Many were probably expecting an upward trade, but no. Let's dissect why. Right now, the chart is passing this support level. Essentially, it has already crossed it and volatility is starting to increase, noticeable by the sharp fluctuations in the candle's body. The next support level is significantly lower, so there is a good field for a price drop. I expect to see the chart at this level. I won't repeat the signals. I think it's already obvious to everyone that both indicators are pointing to a decrease. It was more important to determine the trade opening moment. If there had been a bounce off the level, I would have traded at the peak of this correction. But since it became clear that there would be no correction, it was just a matter of waiting for the moment when the price would deal with the resistance level. The logic is actually very simple, but it's effective and the performance is impressive. Use it, friends, alright? But I want to draw your attention to one thing again. So pay attention to the distance from the chart to the dots. The larger it is, the stronger the trend. The closer the chart to the parabolic SAR points, the higher the probability that the trend may end. But the keyword is may, it doesn't mean must. The chart's approach to the points signals to you that the momentum is fading and the new market trends may influence. But also, don't rule out the possibility that momentum may flare up with new strength, okay? Your task in such a case is to observe and make decisions only when clarity emerges. For instance, right now I see no reason not to trade for a decrease. It seems quite clear to me. The reasons for such a forecast haven't changed, nor has the market situation, actually. Moreover, the gap with which the new candle opened, a good omen of a possible price collapse. Therefore, at the price's pullback, almost to the starting level, in my opinion, it's a good moment to enter the market. So let's summarize, and it's simple, just like the trading strategy itself. We often think that the more complex a tool is, the better it performs, while a simple, at first glance, solution can be far more effective. So friends, don't strive to complicate your trading, all right? Today, I've clearly demonstrated how two indicators can perfectly complement each other and earn good money for you. Whoa, that was thrilling. By a hair's breadth, as they say. There's a result, but I was close to failure, and that's a sure sign that it's time to stop. So let's conclude the trading session and, as per tradition, moved on to withdrawing the earned money. And withdrawing funds, friends, is just as simple and straightforward. Nothing complicated about it. Just specify the amount you want to withdraw. For me, that's going to be $4,000. Next, enter the address of your crypto wallet. That's all you need to do. I'm withdrawing in USDT, but you can choose another cryptocurrency to your liking. There's just one button we see on the screen, and that's the one to press. Just a bit of wait now, friends, and it's as good as done. Or rather, the money is in the wallet. I've explained more than once that the funds are credited within 20 minutes. Don't pay too much attention to the message from the broker. It will be back soon to show the final result. So, $4,000 has been deducted from the trading balance. The money is already with me, and the record of the withdrawal has appeared in the transaction history. The balance left is a bit over $500, which I have left specifically for the next trade. That's all for now, friends. Let's summarize today's trading session. $4,537. That's the outcome of today's trading session. Impressed? Then subscribe to my Telegram channel and join my deposit boosting marathon that happens every week. Newcomers will also get a promo code which will give them a 50% bonus to their deposit. You will also find it in the Telegram. Did you like this video? If you did, give it a thumbs up. Don't forget to subscribe to my channel and also click the notification bell icon to not miss out on any of my new videos. I usually share my trading experience and analyze the coolest trading strategy. It has been so much fun to be here with you guys. I wish you a great rest of the day, and for now, bye bye.